Assalamualaikum and hi. We are from Occurrence 1 Tutorial 2 Group 1 presenting Tenaga Nasional Berhad for CIX2001 Financial Management Assignment. Assalamualaikum and hi. We are from Occurrence 1 Tutorial 2 Group 1 presenting Tenaga Nasional Berhad for CIX2001 Financial Management Assignment. Assalamualaikum and hi. We are from Occurrence 1 Tutorial 2 Group 1 presenting Tenaga Nasional Berhad for CIX2001 Financial Management Assignment. Assalamualaikum and hi. We are from Occurrence 1 Tutorial 2 Group 1 presenting Tenaga Nasional Berhad for CIX2001 Financial Management Assignment. So here we have a total number of 6 members in our group, starting from Akmal Arfansyah, me, Arif Shahib, Izati Hassan, Adlina Shazwani, Natalie Mary Peter, and Irfan Sukri. Moving on to the presentation. So here we have a total number of 6 members in our group, starting from Akmal Arfansyah, me, Arif Shahib, Izati Hassan, Adlina Shazwani, Natalie Mary Peter, and Irfan Sukri. Moving on to the presentation. So here we have a total number of 6 members in our group, starting from Akmal Arfansyah, me, Arif Shahib, Izati Hassan, Adlina Shazwani, Natalie Mary Peter, and Irfan Sukri.
Hi everyone, I will present the executive summary for our group. This report mainly focuses on evaluate Tenaga Nasional Berhad TNB financial performance and strategic position over the past 5 years, which is year 2022 and 2025, where it highlighting its revenue stability, capital structure, and investment outlook. Our group chose TNB as a part of our company research to understand how Malaysia's largest utility navigate the energy transition, manage external cost pressure, and strengthen long-term growth through renewable energy and grid modernization. In conclusion, TNB demonstrates financial stability and strategic resilience, making it a reliable yet defensive choice for long-term investors. Next, we will proceed with company profile. TNB is Malaysia's largest electricity utility and one of the leading energy companies in Southeast Asia. It plays a crucial role in powering the nation's economic growth. Guided by its vision to be a leading provider of sustainable energy solutions, TNB has expanded its presence internationally with investment in renewable energy assets in United Kingdom, Turkey, and India. TNB core business activity include electricity generation, transmission, and distribution. TNB also actively involved in energy trading, engineering service, and international feature. Between year 2022 and year 2025, TNB operation reflect both resilience and adaptation to external challenges.
Hello everyone, I will be presenting the 5-year financial performance analysis of the Tenaga Nasional Berhad from 2020 to 2024 based on Table 1.1. Overall, the financial ratios show mixed trends, mainly due to the nature of the utility industry, regulatory controls, and changes in operating costs and electricity demand. In terms of profitability, TNB experienced a decline in 2021, with return on equity falling to 4.37% as fuel and operating costs increased, while electricity tariffs remain regulated. The net profit margin also dropped to 4.07%, reflecting tighter margins during the post-pandemic period. From 2022 onwards, profitability improved as electricity demand recovered. By 2024, ROE increased to 8.74% and the net profit margin rose to 8.12%, indicating stronger earnings performance and improved cost management. However, efficiency and financial structure ratios reveal some structural challenges. The asset turnover ratio remained low throughout the period because TNB operates in a capital-intensive industry with large investments in power generation, transmission, and also distribution assets. Liquidity, on the other hand, also remained weak, with the current ratio at 0.91 in 2024, showing high short-term liabilities such as bill payables and short-term borrowings. In terms of solvency, the debt-to-equity ratio stayed high at 3.06 in 2024, reflecting TNB's reliance on debt to finance large infrastructure projects. Although this suggests higher financial risk, it is partly offset by TNB's regulated earnings and stable cash flows. In conclusion, the improvement in profitability is driven by demand recovery and cost control, while weaker liquidity, efficiency, and gearing ratios are mainly due to the capital-intensive and regulated nature of TNB's business. That's all from me. Thank you.
So next is cost of debt. So cost of debt represents the effective rate that Tenaga Nasional Berhad must pay on the funds borrowed through bonds and other long-term financing. So it is derived from the risk-free rate plus a risk premium that reflects the company's credit risk and market conditions. So for TNB, the before tax cost of debt increased gradually from 2020 to 2024, in line with rising interest rates, while the after-tax cost of debt is lower because interest expenses are tax deductible. So this measure is important because it shows how expensive debt financing is and how it contributes for TNB's overall weighted average cost of capital. So next is cost of equity. So cost of equity reflects the return required by shareholders for investing in Tenaga Nasional Berhad. So estimated using the capital asset pricing model or CAPM. So it depends on the risk-free rate, the NB's beta, and the expected return, capturing the level of systematic risk borne by the investors. So TNB's cost of equity fluctuated for between 2020 and 2024 as changes in beta and market performance affected the required return with a noticeable rise in 2024 due to stronger market expectations. So the cost of equity is crucial because it represents the opportunity cost to shareholders and forms the largest component of the NB's finance cost.
Hello everyone, today I'll be explaining the weighted average cost of capital, or also known as WACC, for TNB from 2020 to 2024. From the table, we can see that equity has consistently been the main source of financing for TNB, while debt have remained the cheaper option due to tax benefits. Over the 5-year period, the WACC has increased steadily, from 5.51% in 2020 to 6.79% in 2024. This rise mainly comes from higher interest rates, which increase both the cost of debt and cost of equity, since shareholders now expect higher returns. A higher WACC means TNB face a higher hurdle rate when evaluating new investment. In other words, TNB needs to be more selective and invest only in projects that can generate returns greater than this rising cost of capital to keep creating value for its shareholders. Overall, the trend shows that TNB's financing decisions are becoming more challenging as the cost of capital rises. Next, I will explain how the security market line, or SML, is used to estimate the cost of equity for TNB under the capital asset pricing model, or CAPM. The SML shows the relationship between systematic risk, measured by beta, and the expected return demanded by investors. Based on the chart, TNB's beta is less than 1, which indicates that its shares are less volatile than the overall market. This lower level of systematic risk can be attributed to TNB's stable cash flow and its position as a utility company, where demand and revenue remain relatively predictable regardless of economic conditions. Since the expected return fall on the security market line, it suggests that TNB's shares are fairly valued, as investors are compensated appropriately for the level of risk taken. Overall, this implies that TNB's offer stable but moderate returns, making its shares particularly attractive to risk-averse investors.
So this section will review Tenaga Nasional Berhad's cost of capital and investor implication. So first, the cost of equity have increased from 5.33% in 2020 to 6.62% in 2024, mainly due to a rise in beta from 0.68 to 0.75. This reflects higher perceived systematic risk as CNB expanded aggressively into renewable energy and grid modernization in line with Malaysia's energy transition. Next, the cost of debt can be seen have peaked at 7.21% in 2022 before easing to 7.1% in 2024. So this was driven by higher borrowing to finance capital-intensive projects and rising global interest rate, including funding raised through 3 billion ringgit Sukuk Wakalah. So as a result, the weighted average cost of capital have increased from 5.51% in 2020 to 6.2% in 2024, driven by a high proportion of debt in the capital structure. So the debt rate rose from 42.8% to 47.1%, reflecting increased capital expenditure in transmission and energy transition projects under the National Energy Transition Roadmap. So finally, based on the security market line, JNB's beta remained below 1 throughout the period, confirming its defensive nature. Its position above the SML suggests positive investor confidence and attractive risk-urgent returns, particularly for risk-averse long-term investors.
To conclude, Tenaga Nasional Berhad's financial position from 2020 to 2024 reflects a stable utility company undergoing a capital-intensive strategic transition. While profitability weakened in the earlier years due to fuel price volatility, the company showed a strong recovery in 2024. This is evidenced by the increase in return on equity to 8.74% and an improvement in net profit margin to just over 8%, indicating better cost control and earnings quality. However, this improvement must be viewed alongside existing financial constraints. TNB continues to operate with low asset turnover due to the capital-intensive nature of the utility industry,